And that gets us to our next guest, who is Oliver Slope, Blue Line Futures in Chicago. Oliver, yeah, you made a comment when we were off air. A lot of these contracts have hung up the old gone fishing sign.
Yeah, this reminds me of my grandfather's old corn market where, you're trading in a 1 cent range over the course of 3 hours. It's, probably more exciting to watch paint dry, but nonetheless, you and I both got to show up to work and try to drum up some sort of a narrative. There was some news this morning, weekly export data for corn. It was kind of ho-hum, up 10% from last week, but down 12% from the 4-week average. So not a lot to write home about there. I think a lot of the attention going into the end of the year is going to continue to be on soybeans with the weather situation down in South America and Brazil particularly. And it's probably a good thing that there are some weather concerns down there, because if there weren't, I have a feeling we'd be trading sharply lower just on the price action alone. We've got some good reason for this market to trade higher, but we really haven't gotten that move higher. So it makes you wonder, if that weather concern wasn't there down in Brazil, where would we be trading? So it'll be interesting to see how it pans out. I've been talking to some hedge fund managers down in Brazil. They're still looking for expectations on overall production to be lowered going forward. But the USDA isn't going to make that huge adjustment right out of the gates. They're going to continue to slow play it lower.
Just a question about your grandfather's corn market real quick. Did your grandfather ever tell you that we traded in eighths back in the day?
Yeah, he did. He did. So, yeah, you probably remember those days from the floor, right?
Thanks a lot, Oliver, but I'll take that as a compliment. Well, we weren't trading eighths, but we had gotten rid of them by then. But that's why we quote that corn board. That's why a quarter cent is 2, because that represents 2/8, right? And a half, 4 is a half, and 6 is 3/4, because those are all still quoted in eighths, even though we don't trade the eighths. The biggest tick is a quarter cent. So a lot of folks don't know that. So I just thought I'd throw that out there. Great content as usual. Stay right there, though. We need to go away. We're going to pay some bills. We're going to come back and talk more livestock and maybe a little bit more history about the markets. I'm old enough. We'll be right back after this. Is it safe to buy cattle?
If you manage your risk accordingly, right? I think a lot of the people that needed to get out of long positions have probably exited those, and you're starting to see the market consolidate here as we, enter the last couple weeks of the year. So I do think that we probably have carved out a little bit of a short-term low. We did get some export sales this morning for beef. It was like 10,600 metric tons, which isn't really anything to write home about, but it's certainly better than what we've seen over the last month or so. So I guess there's a silver lining there. I think my caution flag would be the fact that we saw basically everything rally following yesterday afternoon's Federal Reserve meeting, and I thought that would have popped cattle quite a bit more than they're trading right now. So the fact that we're not seeing that kind of risk-on trade seep into live cattle is a little bit of a caution flag, but I'm still pretty optimistic that we can continue to at least stabilize at these levels.
Yeah, I think a nice sideways trade over the holidays would probably be a nice, healthy thing for those cattle traders, because, man, it's been pretty brutal. And I think that's a great, we got 30 seconds, but that's a great lesson in a sentiment change, right? I mean, there's something psychological here, too, not just fundamental traders, not just technical traders, but sometimes you have to, take in consideration how strong sentiment can be. Real quick, got 15 seconds.
Yeah, 100%. And it was the FOMO at the high. When we topped out, everyone had the FOMO, the fear of missing out. And at the bottom, you just get that, that deep pit in your stomach, and that's usually kind of at the low end of the range. Right. So I agree, holiday trade is probably going to be the best thing for this market going forward.
All right, and great stuff as usual. Thank you very much for taking the time with us today, Oliver Slope. He's with Blue Line Futures. He's batting cleanup. He did a good job. We'll bring it back home and send it back to you.
Thank you, Scott. Of course, Cal Guy Close coming up at the top of the hour.